Okay, we're live. Good morning and good afternoon. So we're going to start with the ES. We'll just be mostly tape reading because we only got in on Thursday's trading, which is yesterday's trading. So we got one trick pony for yesterday. So that is the only trade that we took for the whole week. And while getting prepped up for this stream, I was reminiscing about an idea, something I've been thinking about, and for a very long time though. It's about the idea of how risk to reward is not real. It's a myth. So this might cause a lot of controversy in the general space, but we are not in the general space. We are solely focused on price and on our own understanding of price. And we are not we are not bombarded by the perception of everybody and the narrative that comes around from everybody, the Kool-Aid in which everybody drinks from. Let's put it that way. That's easier to understand. All right. So understanding that risk to reward is not something, it's not a fixed, it's not something that is fixed. It's something that fluctuates. You can get a reward of 100 handles today, and tomorrow you get a reward of 5 handles. Does that make you a less profitable trader? Quite the opposite. You should be more concerned with surgical strikes, surgical entries, and surgical exits. So when you are participating in a body of price action, you'd want to place more focus on what price is actually doing and less focus on your P and L, because the P and L, frankly, to be frank with you, it is simply just distraction. We have this relative equal eyes here, but because of this back and forth price action, I'd want to see how it delivers though. So we are taping to see how price trades. So here on Thursday's trading around 8 a.m., we have buy side liquidity, which was the previous day's trading high. And at 12 p.m., we made the low here, which was the previous day's low. So we had previous day's high and previous day's low. And price has rallied for previous day's high. So we are looking at this relative equal highs, this relative equal highs, which is also the previous weekly high. So we're trying to see how price trades around it. The issue I have with this and why I'm currently not trading. Today is currently Friday. One, that is one of the reason. The second reason is that this back and forth price action, all of this, we're currently around the midpoint of this range. This balance here is seen as the balance price range. So it's either price would want to use this as resistance, like a high resistance liquidity on signature, resisting price from going higher and then consolidating inside of the week and then maybe come for the previous day's low, yeah, which is this Thursday's low on Monday's trading or even today trading, because currently we closed here. This was the opening range gap low. Remember from the previous stream, I noted that I use the thickness of horizontal lines and whatnot to illustrate price action, because there are times, especially when trading live like this. and we're currently trading below the Sunday's opening price here. So we opened here on Sunday and we closed here on Friday. So here you have the new week opening gap, and price has used this new week opening gap as a form of resistance, resisting price from going higher, then coming for lower prices. Let's indicate this new week opening gaps. This is one of the reasons I don't like indicators. It messes up my chart, but that's what you get when you want to go the easy route and not manually impute your data. So here is the previous weekly new week opening gap, and this right here is the current new week opening gap. You see how price traced to it here, to this, to the low of this new week opening gap, this current day's new week opening gap, and drop lower. This is the algorithm indicating that we're interested in lower prices. So we had these lower prices here on Wednesday, and on Wednesday we made this low here. I do not believe this is the low of the week. Personally, I do not believe that, because of this back and forth price action one, and also this new week opening gap. So I'm trying to see how price trades with this new week opening gap, how price close. At 10 a.m. we have a news release that's coming up. I won't This will be a short stream. It will be we'll, we'll end the stream at about 9, about 10:30 or 10:20. I have to be by 10:30 a.m. So, but that's by the way. So here on Tuesday, this blue rectangle horizontal, this blue rectangle like this that you see here, this is the Tuesday's first presented fair value gap on the 15-minute time frame. This is why it is being drawn out in time. So price used it here as a form of resistance broke turn support, then open at 9:30 and then rallied higher to the midpoint of this range. This is not a measured range. This is just taking this candle's body here, the highest body's close here, and here the lowest body's close here. So indicating this range. So we've had a rally up and trade to the midpoint of it. This is an extreme premium to me. So I am not interested in taking long positions for this to come for these highs or these highs, because one thing you need to understand is that the algorithm sees this as a form of manipulation. The algorithm uses this as a form of manipulation. Let's put it that way, because it knows that a lot of traders, a lot of traders will see all of this rally from yesterday Thursday's afternoon session, rally higher like this, and they would want to participate in this rally higher to come for these highs. But I would not want to see that. And I like as this new week opening gap, the previous week's new week opening gap, acted as a resistance broken turn support here. So price came higher and then used the new week opening gap as a resistance level to go higher. Also coupled with the new day opening gap. Yeah. All of this happened during the London session. So during London, we had the power of three, which is accumulation of smart money long position, then manipulation lower, then rally higher. So we had that take place during the London's trading, mostly before London open, because London session starts from the 2 a.m. to the 5 a.m. It does extend to the 11 a.m., but that is by the way. What we are currently talking about now is the Q zones, how the algorithm uses this now, and how I'm currently getting narrative on why I'm not taking a position today in price. Would go into the ETBT of it once it's 10. We'll go into raw tape reading data. So, as I was saying earlier, the idea of risk to reward is an absolute myth, because you get stuck over emphasizing and over analyzing on your P&L and being worried about what you lost and what you made. And when you are fixated on the money and not on price, you've lost focus, you've lost the plot. One thing you should avoid doing is losing the plot. You should be so you should be so vigilant when it comes to understanding the plot that you are not phased. You are not phased by a choppy set of price action or Jordan or any form of negativity, any uncertainty that you cannot like currently fathom now. You are not phased by it because you've tested your model and you've known yourself. You understand that this price does not make you. What goes on inside of this chart does not make you or break you. What makes you or break you are the decisions you choose to take as a human. So that way, it keeps you from what matters, which is your actual point in the market you took. So if you have a goal, for example, if you have a goal to get about 25 handles in a week, 25 handles in a week is actually an extremely good rate of return when you're talking about the indices market, when you're talking of the S&P. So if you can get 25 handles for a week, you are good to go for life. You are set. You do not need to aim anything higher above that. But you should understand that because it is easier for some, that doesn't mean it is easier for others. Previously, I gave an assignment on the Telegram channel about for the participant to get 15 handles in a week, and only a handful of them could do that or even attempt it. Because one thing, a lot of people do not pay attention to it being given to you in the Telegram group or in the private settings. It is for your it is for your own development. It is for your own study, and it is me pinpointing where I'd want you to study at that particular time in price. Most of the times, a lot of you do not partake in this assignment. That is you stealing from yourself. You're actually wasting your time. That is when you are intentionally wasting your time because care you do not care about participating in this market. You do not care about learning. You are here for entertainment purposes. If you're here for learning, and what are we learning here? We're learning how to make money and how to not lose money. No, we are first of all learn how not to lose money because everybody can make money. That's not the issue. Anybody can make money. The issue is keeping that money that you've made. That's where problem comes up. So let's make this full screen. So as I was saying, the actual problem is keeping and preserving that money which you've made. So that is what we are doing here. And in this second set of teaching, we are currently talking about capital preservation, when you should note risks and when you shouldn't. Most times when doing live sessions like this, I would go mute because you do not expect me to be blabbing all of the time. If I keep on blabbing all of the time, I'm losing the plot or price action. I cannot multitask in that aspect to be blabbing and explaining something to you while trying to get a feel for what price is trying to do. But because we are not trading, we are reading, understanding when not to trade, even though price looks juicy for you to participate in. That doesn't is not an invitation for you to trade. Now back to what I was saying, why I'm not interested in taking any trade, any long or any short position. First and foremost, we have those couple of high resistance liquidity one before we get to weekly this previous weekly high. And in 2 minutes time, we're having the consumer sentiment release data that's coming up in by 10 a.m. And now, during the midnight session, price failed to come below the midnight opening price during the London session. Sorry, the previous session before this New York coin session we have now. Price failed to come below this midnight and then rallied higher. And during New York, also at 8:30, price failed to come lower to go higher, which is the typical power of three understanding, like the schematics of power of three. So you have consolidation, price goes below an old low, a below true opening prices, whether a midnight opening price or the 8:30 opening price. And then so you have this accumulation manipulation to the downside to purge out sell side liquidity, pair up liquidity, and then rally higher to distribute this long position to the upside. Now, because we did not have that, so at 9:30 price rallied higher, left this imbalance here. We fill this imbalance here, and then price rallied higher again. Now, because most of the distribution has already taken place before the news release by this 10:30, by 10 a.m., we are not participating in the marketplace. We do not care about missing a few handles as long as we preserve our capital. The main aim is to preserve your capital. And when trading, you have to avoid any negativity to that will prevent you from having a clear one-sided mind when dealing with in price. Anytime you can frame the marketplace in both sides of the market, that is a an indication for you to stay away from that body of price action, because price only does one thing at a specific point in time. That one of two things at a specific point in time. It's only executing a particular program. So unless you can identify what program is being executed, if it is your model that is being executed or whatever program that's being executed, you need to be able to identify that program that is being executed. And if the program does relate to you and it is of your personality and of your person, let's put it that way, then you can participate in the market. And unless a couple of criteria is being mashed up together to support your notion a of a tradable environment, you do nothing. So we're going to look at the 15-minute trading interval. Let's look at the higher time frame, which is the 1 hour. So we have this high here, which is the weekly high. And we have this low here, which is the weekly low. So price has already traded above the midpoint of it, which is from this to this. I had to get the cough out real quick. So price has already traded above the midpoint of it. So we are here on Friday inside of the trading range from the opening here, which is Sunday's open. Then you had Monday's opening price here. The opening on Monday was 5,866.3, and then we have this low here. So we are watching price. We are watching like a hawk, trying to get a feel for what price is trying to do inside of this going into the close of the week. So from my earlier point, the idea of risk to reward, take it away from your trading plan, from your understanding, from your mindset, because it keeps you back, it keeps you moving around the loop. Because if you get the trade that offers 5 to 1 handles, and you've sorry 5 to 1 risk to reward, and you are currently up in profit about three reward, will you not take that if the market is giving you an indication of a reversal to reverse back to your entry point and possibly your stop loss? Is it not wise to take off a position or take a partial around that pool of liquidity? But that's by the way. what is being marked out here? So currently we have this lows here, this relative equal lows, and we also have this highest candle body close here. So we want to see if this rejects price and uses this as an inversion to go for this lows, or if we come for this relative equal highs. So this is the internal dialogue that will be going on in the traders that are currently trading. So they'll be confused on where price is trying to go because price is giving mixed signals and multiple signatures. So they'll be confused on by price. Let's put it that way. So I'm currently overlapping the volume imbalance coupled with the coupled with this fair value gap we're currently outlining here. So I'm going to draw this out in time. So we want to see how price trades inside of it here and possibly come for this lows. So rejected from this price level here, then drop lower. We'll keep on watching price. This is what it's like to read the tape. You're reading pure unadulterated price action as it is printing live. This is currently a live market session. So market is currently open. So if you want to see buttons being pushed and entries being made, we do this live every day at 9:30 a.m. Most times inside of the private session, but at a certain time we do a free public streams like this. All right. So and this is not a signal service first and foremost. This is an education channel and an entertainment channel. Let's put it that way. Now, if we get price go trade above this relative equal highs, this is further indicating to you that this is not the kind of trade environment you want to be participating in. Let me explain. Remember, the bodies of price action should tell you storyline on what price is trying to do. Now, read this current price action now from 8:30 a.m. to this current time. We can just take out just from this current previous 15 minutes that just elapsed now. You can see when price rallied higher here and left this imbalance, the bodies first here from the within the first 10 minutes, the bodies was respecting this fair value gap here, and then it violated it lower. Now, if you're paying, if everything is favorable and this is a favorable trading environment, if we are to come for this relative equal highs, this candle, this fair value gap should not be violated like this. So this is giving mixed signals, and when you drop lower like this, you can see the next candle, this 10:13 a.m. candle, 10:12, 10:14 a.m. candle, and now this current printing candle. Now their bodies are respecting the low of this imbalance here. If their bodies are respecting these lows here, from the idea of understanding that the body tells you the story, the wicks are doing the damage. What story are you getting from here? That means the story you're getting from here is lower. You are getting a story of lower prices, right? But you have relative equal highs here. So you get what I was trying to outline earlier. If for any reason you can tape read that the market can likely do two things, either up or down, that is not a trading environment you want to be participating in. No matter how many points as price has trade has given to the direction you're trying to buy to, or the direction you're trying to sell to. So that is that about that. So I have to go prepare for my event real quick, and I'll talk to you next week probably. Or you're interested in learning further, you're interested in a private settings of lecture where you get someone to like take you through the process of understanding how to read price action and hopefully profitability, because I can what I can only take you to the river, but I cannot force you to drink the water. Like I'm dead serious. Like I can show you all of the process and show you from the beginning of the process on my journey on where I was lucky. I'm not trying to spend too much time here though, but where I was lucky was meeting ICT at a very when I started being interested in trading. Let me put it that way, because if had met ICT earlier, I would not like being interested in trading. Like I'll just discard it as wrong information because I actually did met got the information about ICT like a month before I started studying ICT. When I got it, I just saved it on my phone and I didn't look at it. The only reason I went back to search for his YouTube and looked at his content was because I was currently in the process of becoming. Let's put it that way. So have a nice day and God bless you and good